Hello to everyone and welcome to our webinar, Fundraising is Not a Struggle. I'm Melanie Sierra. I am your Chief of Staff here at Multipliers, and I'll also be your moderator for today. We have such an exciting lineup of speakers to make up our amazing team here at Multipliers. Joining us is our very own CEO and the visionary behind Multipliers, Genia Xasis, London's very own detailed VC analyst, Nicholas Oynayan, and the newest addition to our team, Kamogela Mosime, who's our investor relations manager from South Africa. Well, before we dive in, I just want to quickly remind everyone that you feel free to submit any questions throughout our session, and then during our Q&A session, we'll go ahead and answer them for you. So to kick us off, let us start with introductions from the team and share a little bit of background about themselves and what they do here at Multipliers. Genia, we'll start with you. Go ahead.
Yes, thank you, Melanie. I would say that first, I built a tech recruitment company, A-Hub, in America, and I was working on my sales muscle for 7 years. And right now, I am applying it into investor relations field. And during 3 years, we at Multipliers closed $10 million for seed and Series A companies. And basically what we do is that we provide fundraising service for these kind of companies, and we will share a lot of information about that today as well.
Thank you, Genia. Go ahead, Nick. You can introduce yourself as well.
Yeah, thank you, Melanie. So yeah, my background is a bit different from Genia. I started my career in financial services, and then I founded my own company, so a fintech company where we focused on crypto, and we were able to raise 2 rounds with it. So it was quite a great adventure. And I met Genia and I joined Multipliers, and ever since I've been working with her and with clients to help them understand that raising money for your company hasn't have to be portrayed as a struggle.
I definitely agree. And to add on to that, Camo, go ahead, our newest addition to the team.
Thank you so much, Melanie, and thank you to the team for welcoming me on board. Similarly to Nick, I've got a background in finance. I started my career in asset management after graduating accounting and business school. I moved through asset management, specialized through infrastructure funds, funds of funds, listed property, and I got sort of deep experience in the M&A and venture capital sector, particularly in the investor relations and fundraising side of things, as well as corporate finance and valuation. So I'm really excited to join Multipliers and sort of add value to that effect to our clients.
Thank you, everyone. For those that are joining us and aren't familiar, Multipliers is a team that's passionate about helping founders. So particularly those that are in Web3, AI, in the tech sector, we help navigate that fundraising process for seed to Series A companies. Our goal is always to make it as smooth as possible while we guide our founders from everything, from pitching to finding the right investors and also closing deals. But with the right support, fundraising does not have to be a struggle. So let's just jump into our discussion. Genia, I would love to start with you. Could you share a bit as to why you founded Multipliers and your vision behind it?
Yes, and I would probably add here that it's basically two sides of a question all the time. We definitely help companies to raise capital, and we also provide different technologies to VCs in this region, and this is very linked to our mission. I think that for global companies that are listening to us today, and maybe it's not very obvious, but in this region we have so-called Vision 2030. This is a program that our government in UAE, United Arab Emirates, and in Saudi Arabia agreed to follow. And you could probably Google the program. It calls Abu Dhabi Vision 2030, and it is highlighting different sectors where this specific region, Middle East, Northern Africa, is thinking that they really want to invest in. And the way it usually works that, let's say, government is supporting certain industries, and then after that, corporates are supporting the same industries. It means that there is a place for B2B services to provide, to actually close deals with these governmental entities and also with big corporates. And specifically for this region, how it works is that usually venture capital investors set up the trend in this region, these venture capital funds are following the trend of the government. It means that our vision and our mission is to bridge global technologies with local capital. And we really want to help our government and the government of Saudi Arabia and United Arab Emirates to make this Vision 2030 possible.
And Genia, this is something that you've done for a couple of years. So, from your experience, what are some challenges that you've noticed that founders face when they're trying to raise funds?
Actually, I would say that there is a lot of different challenges founders could face, but we specifically focus on two different groups of founders. First of all, this is founders, successful founders who previously raised pre-seed and seed investments from their own network. And those founders who really like networking, they're probably have no any struggles with closing their seed rounds, let's say $1.5 million to $2 million. And then after that, when they start closing Series A, they will face challenge because they don't know how to raise from open market. And we provide services of fundraising for this type of clients, and we explain them how to work with investors who previously haven't seen their pitch deck and haven't heard about anything. Or let's say they raised their seed let's say seed extension from local funds, and right now they want to scale on the global market. And so the question for them is how to actually connect with global investors, how to sell them, how to engage with them through like Zoom, Google Meets, right? How to actually close online. This is group number one. I would say that group number two is that we're working with outstanding founders who previously has built successful companies, but in different sectors, not in tech. Let's say they opened, I don't know, a grocery shop, or they have I don't know, a company that is providing services for accounting firms, right? Like different sectors. And they definitely know how to work with teams, how to hire, what is P&L, what is unit economics, and all other things, but they haven't built previously tech product. And so right now they're raising their first round, even though they self-funded the first, let's say, pre-seed or angel round. And then right now they're raising seed from open market as well. And they have this outstanding entrepreneurship skills, but they have no idea how to build a product. And then they're looking not only for money, but also for support of local VCs and their expertise. This is two sectors and two groups we are trying to focus on because we cannot help everyone, but we definitely can help these two kind of founders.
And I think it's interesting because founders sometimes don't even realize that these are challenges, or that they even exist. So, how do you help them recognize and go through those challenges?
Uh, Basically, they really need to understand that to raise, let's say, $5 million out of Europe or to United States, if they are the founders from GCC, they need to understand how to build a pipeline. That this is not a hectic process. It's not that they are going to Gitex and after that they close $5 million. No, it doesn't work like that. This is a very structured process where you have different sources, where you have cold outreach through LinkedIn and emails, and maybe sometimes cold callings. And then you need to definitely network on different conferences, and you need to understand which conferences you want to fly in. And then you probably need to try different other tools, like, let's say, organizing LinkedIn Live. And last year we organized a lot of them because we were in the bear market. It was not very easy to close around. And some founders were even kicking off YouTube channels to just start advertising the company. So you really need to understand how to use all possible tools, how to build a strong pipeline, and then stage by stage move these deals to term sheet sign.
It's definitely a lot of different strategies that you even taught all of us, as part of the team. So, what should founders expect? How long does that process take when working with entrepreneurs?
Normally, based on our experience, let's say for experienced founders from these two groups which I mentioned, it usually takes 1 or 2 months to build a pipeline, and for that they need to schedule at least 40 different calls with venture capitalists, and then after that move them to closing a deal. And then the process of due diligence also lasts some time. Sometimes it takes 2 weeks, sometimes it lasts 3 months. So I would say that the shortest is probably 3 months, 3 to 6 months. But for some founders that are not specifically from this group, sometimes it takes 18 months. And that means that you need to raise the money to cover all this period to not run out of cash.
And to transition you a little bit, because I know you work with Nick on this as well. Nick, you're deeply involved in that early stage fundraising efforts. Can you walk us through that multipliers approach and how that process looks like week by week?
Yeah, of course. I mean, like Genia mentioned, I think you have to have a very structured approach. And sometimes when you're a founder, you don't have time to go through all the due diligence and you don't have time to select each and single investor that could potentially bring you an investment in the future. That's why with joining Multiplier, we really structure the entire process for you. Regarding the week by week, so like Jenna said, we usually onboard a client depending from 1 to 2 months. The first week is usually the inactive part where we most discuss with the founders what are their go-to strategies, what investor that they're looking for, what investor they do not want to have on their cap table. Really understanding what the client's needs are. We also help them revamp, for example, their LinkedIn page. I personally make sure that all their documents, including pitch deck, one pages, we also create one investment memo, are all up to date and are all structured in a way that there is no mistake if the VC looked at the investment memo and understand that, okay, this is not a problem because this is actually concise. Because believe it or not, some of the valuation you would see out there uh, are very uh, sorry, some of the valuation are very inaccurate. Then going forward to the second week, it started to be more of the activation phase. So once we know exactly who you're targeting, we would then look at the investors we have in our pipeline. So Genes has a huge presence in the GCC region, with a huge network of VCs. So it is something that's also help us and the clients get their hands on and their foot directly inside the door. Then we move on also to creating the outreach for them, understanding, okay, these are the core outreach we're going to do for you, regardless if it's from our side, from the founders side with directly through their emails. And once the pipeline is built, like Jenna mentioned, we then start slowly to follow up on the different calls investors we have. And usually towards the third week, if lucky, late second week, we work. We are able to schedule the initial calls for the investors, for the founders with the investors. And throughout this 4 weeks, this usually lasts 3 weeks. So towards the 4 weeks, obviously, this is the entire process from week 2 to week 4. We then move on to our monthly report with what has been done with the founders. And from there, we trying to see if the founders would like to extend an additional month with us, because I think it's like Jenna mentioned. I really want to reiterate: you cannot raise 5 million in a week. It's not by attending an event that you will be able to raise this amount of money, and that's why what we do is key with such as the investment memo, for example, because it's really shortened the time frame from introducing yourself, pitching, and everything when the due diligence is already done and you're already pitching it with the investment memo to the investors. And obviously, I just want to reiterate, like Jenna said, the network we provide, because we usually work closely with founders or with people who already have a presence in the Gulf region, because this is something where we are very strong and unique aspect that not any other company has. Working with like a lot of VCs, angel investors in the region, that's really the strong point that as NVC and as multipliers we bring to the table.
Oh, yes, definitely, Nick. And it's such a detailed process for all of us that are involved. And I myself, as well as Genia and Cameron, we know how much you work hard throughout these weeks with our clients. So when working with these companies specifically, what are some of the things that founders tend to overlook? Let's say when they're pitching or when they're even managing their own company. Could you share a couple of experiences or go ahead?
Yeah, sure. I mean, I think there's very common mistakes and misunderstanding of how to raise money nowadays, especially people still think we're in this kind of era where it's still during COVID pandemic, interest rate was very low, liquidity market was very high. You were able to have investors pouring money in companies like you were basically buying candies. Let's be honest. And now it's the market has slowed down, and obviously there's a bit more realization that VCs, even private equities, tend to take a bit less risk and invest less money at a time. And so that's the realization that people sometimes oversee the valuation. They in terms of the amount they want to raise, but also what equity are they willing to give up for it. This is one of the main aspects. A second would be not having exactly the direction for your product. So especially when you're in pre-seed and trying to raise pre-seed money, you don't really have to have an exact direction because you're still like pre-revenue. You probably have an MVP, but when we're helping you raising Series A, usually your direction should be set, and then you should be able to say to the investor, okay, this is the direction I'm taking because what we've done with the pre-seed didn't actually work, but this we've tried it and it works, and this is what we want to pursue it, and hence we're raising funds for this. So these are some of the common mistakes that we found with the different clients we have, and obviously that we helped, and obviously some of them have been successful and they've been able to raise money. So so far, I think these are two of the common mistakes that can be found throughout most ventures.
You mentioned something important. The market is definitely changing, as well as our approach with investors, because they realize that as well. So when it comes to being selective with investors, can you explain why we don't target every investor, or why being so specific is so important?
Yeah, it's a very good question, because even like I can relate to when we try to raise fund with my company that I mentioned earlier. Is as a founder, you're usually very busy, and usually raising money is some of the founders like it. I really enjoyed it. Some of the founders don't really like it. They just want to build a product. And when they look at investors, they just look at, okay, I know this company raised from my colleague who works in a totally different industry, raised from this VC. I'm going to go and see if he can introduce me. And so the thing is, if your colleague who's created a climate tech company and you have a Web3 company has nothing related to each other. So the VC, you would lose time by looking into the VC, creating this short bond with it before even pitching it, that you ultimately lose. That's why it's very important to restart and kick off your research by looking at exactly what kind of VCs you have to target. If you're a Web3 company, what are you have to target? Web3, fintech, people who invest heavily in this industry, especially Web3 being something quite new. I personally think we're still in this bubble, and I think it's very important to understand that not every investors will be investing in Web3, and Web3 is very big. There's a lot of verticals. So also looking at the different verticals your product is in and what verticals they invest in. But I think Camo also can relate, because he worked closely with companies in South Africa, which is obviously a different region, but I think he could touch upon this topic a bit differently from his perspective.
No, definitely. Go ahead, Camo. Go ahead.
100%. Thank you. And yes, 100%. In my experience, it's absolutely crucial to avoid a mismatch between your investor and the founder of a company trying to succeed. So the one thing you always need to take into account is that there is a common thread between the goal everybody wants to achieve when building a company. You want to achieve very, very healthy ROI. So you want to avoid this mismatch because you want to firstly align with your goals. You want to ensure that your investors' expectations align with the company's vision and operational goals. And this will obviously foster a more harmonious relationship between the two parties. So they're on the same page regarding objectives, financial returns, growth strategies, social impact. It'll enhance this collaboration factor and sort of between that relationship. It also helps with efficient resource allocation. You have to be aligned with, okay, we've raised these funds. How are we going to optimize them and getting the company to the next phase that we wanted to get it to? Last thing you want is inefficient allocation of these resources. Investors, for example, are very short-term focused, whereas the founders are long-term orientated. This will result in pressure to make decisions that undermine the strategic direction, and this will hinder the company's growth in the end, and everybody loses. You want to harness that trust and communication. This is something that clear alignment on these goals between the two parties can foster. Open and honest communication between investors and companies, with both sides understanding each other's priorities. This will lead to more constructive discussions and willingness to navigate challenges together. And there's also an impact on future fundraising. So if you start a relationship with mismatched expectations, future fundraising efforts will be affected. The company has a history of misalignment with investors. It's going to be a struggle for them to attract new capital in the future when they need that next round. So it's very important to make sure that throughout the journey of the company, no matter what phase you're in, you always target that alignment as a key incentive for the company. And this will ultimately then lead to long-term success. Whether, I mentioned earlier, your goals could be short-term oriented or long-term oriented. When you start a business, you're starting a goal concern. You are in it for the long haul at the end, and you want to achieve long-term success. So ultimately, avoiding this mismatch will contribute to that long-term success. Both the investor and the company will win in the end. And so it is very, very crucial to make sure you have this alignment from the beginning.
We definitely want long-term success for anyone that's working with us, or any founder really who's just starting off their fundraising process. I would just like to remind everyone that's here as well that feel free to ask questions, as we'll be coming up with our Q&A session a little bit soon. But back to you, Camille. One of the things that I do love about Multipliers is that global outreach that we have between all of us. Genia's in Dubai, I'm in Miami, Nick's in London, and like Nick mentioned, you're based out of South Africa. So how does that experience, particularly working with LPs in different regions, influence that fundraising process?
It's been a very, very rewarding journey, I think, in my career, having worked in the global landscape, especially being based in Africa, which is an emerging economy with a lot of promise and a lot of sort of opportunity. I think from a skill set point of view, you sort of garner the sort of skill of adaptability, number one. You navigate complexity, right? If I have to reference the African markets where I'm from, you have to be able to adapt plans and strategies that are going to align with local conditions. A strategy that'll work in Kenya will not work in South Africa, just because you reach the end consumer differently based on the resources that they have to be able to work with. So it's gaining that understanding that will give you a sort of edge in understanding exactly what you're trying to achieve and how exactly you're trying to move the market that you're operating within. This type of experience taught me the importance of understanding the cultural nuance and regulatory landscapes as well. There's also relationship building, right? In my role, relationship building is very important. And relationship building is not just getting to know somebody, it's getting to understand them, how they operate, what they value, what their background is, how they do business, and how you will eventually get a yes from them. So if I have to make reference, for example, and a very regular if I can call it example, if you look at how the Japanese do business, everybody in that market is very capable, everybody is very well learned, everybody has the ability to achieve something wonderful from a very quantitative perspective. But being able to relate to the culture, how they speak, how they dress, how they conduct themselves in that business environment is a very core part of going to drive your success in making sure that relationship ultimately benefits you both in the end. And I think this global experience and adaptability and understanding this is definitely something that will enhance our ability as multipliers to be able to do that for our future clients.
I'd love to touch on the fact that you brought up, Japan and the different regions. What trends are you seeing across different regions in terms of that investment opportunity or that challenge?
That's an amazing question. So my favorite markets to work in are sort of the emerging markets, because we always see constant change. So in terms of investment opportunities, for example, let's start with the emerging markets. There's a significant push towards digital transformation. Sectors such as fintech, e-commerce are driven by increased internet access and mobile usage. You guys, or some of you, might be familiar with, M-Pesa and Safaricom and how they've sort of revolutionized accessibility to data in those regions and how people transact. And that has very much shaped how businesses sort of move around in those economies and where they sort of try to grab opportunity. In the fintech space, the payment sector, bringing financial accessibility to everybody, financial inclusion, if I can actually rephrase it to that, has been quite a big push. Sustainability is also a big one, and I think this is a global consideration. not limited to any region. We're all focused on ESG. We're all focused on being compliant and having investments that really speak to the fact that we care not just about lining our pockets and making a business grow, but also we care about how it impacts the future of the globe, and obviously how it makes you look as a company founder. You want to look as somebody who is socially conscious. You're not just worried about yourself. And in terms of sort of risks to that effect, there are other things that you need to consider in terms of trends. So, something could be trending in a region, but you also need to understand that there are external factors. Much as you've identified a trend, it could still impact the sort of efficacy of your investment. So if you look at something like geopolitical risk or ever-changing regulatory risk that you didn't foresee coming, you need to sort of have that understanding of, you can have the perfect blueprint for scaling a business, and what are you going to do with this round that you've finally achieved, and you're going to create further runway for your company. But not having that understanding, something you didn't consider that you thought didn't have to be a consideration, actually very much does have to be. So in a society where there are so many things happening in the world, from a socioeconomic point of view, geopolitical, just various facets of what's happening in the world, if you just stay in touch with the news, it has now become a trend that you really do have to keep in touch with current affairs to that effect. I could go on and on this point, because the world is a very big place, but I think that's the beauty of this, right? We love to identify opportunity. We love to see exactly where we can fit in and just create a change.
No, definitely. To reiterate something that you mentioned, it's definitely changing, and there's always these outside factors that maybe sometimes they don't consider. So when it comes to that company valuation, it's on the top of every person's mind. How do you manage those founder expectations between being realistic and unrealistic when it comes to valuation?
Yes, so this is something that I think we can all relate to. So, we all get very excited, especially when you're in a founder's shoes. You've created a business. You've got these sort of Herculean expectations of what you want to achieve, which is amazing. But, the pitfalls, and sometimes people need to be brought back to reality, is the common overestimation of future growth, which ultimately impacts your valuation. I see a company here 5 years from now, and therefore my valuation is X. But your company isn't at the 5-year point yet. We are chatting today, and therefore you need to be realistic with where your company is and how we can grow from the point that we're at to the 5-year mark. So overestimation of future growth, overly optimistic growth rates, without a solid basis, you kind of just use very rudimentary data to form a basis in terms of these judgments. That's a very common mistake that I see when it comes to this. Also, things like ignoring market conditions. Also assuming that market data availability is firstly, sound and is comparable. Very often you see founders coming and say, they've this research, they went on this website and they saw this data, they based their growth rate on this, etc., etc., etc. But it just isn't really realistic. It's not really based on sound. So you really have to spend a lot of time just making sure that your data has integrity, if I can put it that way. And again, it just comes with experience and understanding what you want to achieve, where you are, and building a realistic roadmap of how you're going to achieve that, along with all the stakeholders in your business.
Definitely. Thank you for that, Camo. And thank you to our amazing panel for talking a little bit more in detail about fundraising and multipliers itself. I would also still like to remind the audience that are still tuning in to feel free to ask questions, as we're going to be coming up in a couple of minutes for a Q&A session. But I do want to transition us into probably one of my favorite subjects, simply because it's coming in a couple of days, which is GITEX. So it's happening from October 13th to the 18th in Dubai. And for those of you that don't know, GITEX is one of the largest tech events that's in the region. It's a major opportunity for anyone in the tech space to connect with leaders, to discover new innovations, and of course, to just network with investors. I like to specifically ask this question to our CEO, Genia. You've been to LEAP, and now we're going into GITEX. Could you share why this is so important for those that want to join, and how to join with us specifically?
Yes, I also want to mention that today we discussed with the team that we also want to organize another group tour at Web Summit Qatar, because right now I'm in Qatar and I'm looking forward to build relationship with this ecosystem as well. So I would say that this is our second event. Last March, March this year, we organized a group business tour, a fundraising tour uh, in Saudi Arabia, catered to LEAP conference. For companies from all over the world, you need to remember just two names, which is LEAP in Saudi Arabia and Gitex in United Arab Emirates, and right now Web Summit in Qatar as well. So these are the biggest tech events in the region. And if you really want to start building a relationship with these countries, then probably you need to first fly to these conferences and understand how everything works, to get acquainted with venture capital investors, to understand what are the needs of the corporates, what are the traditions. And we are the best gateway to all the companies that are willing to open these doors to GCC region. Definitely, you can buy tickets by yourself and fly and join the conference. But I remember my first experience was that the conferences are huge. Let's say Leap welcomed 250,000 people this year in March, and I think that next year it will be even bigger. I don't know how many thousands of people will be in Gitex, but it's also a lot of people. And my first experience was. I remember that I participated the main event because there is two different locations for Gitex. One is more for government companies and for corporates. Another one is more for venture capital investors and startups. So we specifically designed the program, which will last for 4 days, 13th of October, which will be next week, to 16th of October, to introduce founders of the companies that are ready to raise capital here in the region, or let's say build relationship. Let's say right now you're at the pre-seed stage and right now you want to build relationship with local funds. This is the best way for you to start building relationship with these funds, because many of venture capital investors, let's say the common answer when investors pass on this deal is that they usually say that we haven't built enough conviction in the team capability of delivering the result, because they really want to spend a little bit more time with you to understand if you can actually deliver the result. So, 4 days, and there will be visits of all tier one venture capital funds. And then also, we want to connect you to specific panels and to specific people who we know that they do invest and not just raising their own funds. They already deploy capital, and we know that this is their specific investment criteria that is matching to your startup. Also, we know a lot of side events that you have to participate in order to meet right people. And also, we organize our flagship event, which is a yacht event. There will be just 10 places for founders, five already taken. We have five more for the rest of the week if someone of you want to join. And I invited investors from my network. Nick is also working on that. He will probably explain in detail how he works with the team right now and how he is securing meetings for them.
Yeah, I mean, like Jenna said, I think this is a great opportunity for any founders to build a network and even start building this connection very early on, even if they're not looking to raise right now, but for example, looking to raise in early 2025. So how we do it and how we've been working on for the past months. So like Jenna said, it's a very limited amount of space. We onboard 10 individuals, 10 companies. Usually we'd rather have the founder with us so we can probably introduce it, and obviously you can sell usually the company a bit more. So how it's divided is uh, like Jenna said, it's a 4 day where we're able to meet investors both before the event, directly to the office of different VC funds in the region with Jenna's network. And then we bring you to the event, the Gilex event, which is the one for the VCs and investors and startups, and where we're able to have the connections that we have in the GCC regions, because people are flying from all over the world, but most of them are flying from the GCC region to this event to meet exceptional founders like yourself. And we have already those connections, so we bring the people we have on board to meet. Obviously, like I said, it's very tailored. We're not going to bring someone in AI with a Web3 investor, so you will bring you to the correct person initially, and you're able to speak to them face to face rather than what you traditionally have online. And so that's in essence what we provide. I think Jenna is a bit modest with the yacht party that we have is quite unique in the sense that you will be onboarded with so the 5 countries that we have, and if people decide to join with an additional 5 founders on a yacht that's in the middle of the sea, where you will be stuck with investors. So there is no reason for you to not be able to network and really build this connection very early on. Uh, and overall, we want, obviously, our goal is to help you, depending on which stage you are, either build a strong relationship or close some deals. Obviously, you do have to understand that it is not because you're talking with someone for the first time that he's going to be, I really like your idea, let me invest 1 million. That's not exactly how it works. But you really build this connection, and the investors get to put a face on the company. And this is, I think, very important, especially early on. I think for anyone who is looking, like I said, to participate, we still have 5 spots available. I think we will put the link in the chat so you can have a look at it. And if you want to reach any of us, there's an email at the bottom or even a WhatsApp number, and we'll be happy to answer any questions you might have.
Definitely. Thank you, Nick and Genia. And to add on to Nick's point, there's a reason I call him that he's so detailed, because he really does take his time to specifically, choose these panels and these conferences to the company that pertains to you. So thank you both. I would like to, at this moment, go ahead into our Q&A session. We do have one question here. We'll go with one of the comments here. To show up here. Genia, or anyone really, input from the audience and from founders that they speak with. The investor landscape in the UAE is quite immature in the founder's view of trust. A lot of investors posturing with the hidden intent of scaling. There's internal marketing and development businesses. Genia, can you expound a little bit more on this?
Yes, of course, and this is a really very good question. I've heard a lot about that, and that partially is true, because most of the local GPs are first-time fund managers, and this is a reality. And we specifically work with 4 different groups of investors. I would say that first is investors who previously invested in real estate and oil and gas, because we are coming, let's say, Middle East. Most of these countries here are coming from the place where we were oil and gas economies to right now we, let's say, even looking at Dubai and performance of United Arab Emirates. Right now there is a lot of other industries that also contribute to our commonwealth. And so group number 1 is high net worth individuals that are previously invested in real estate and some oil and gas companies. And right now they're making their first steps in investing in tech. And it's not very easy to work with them, because this is certain mindset. They're not playing this valuation games. So let's say they're not thinking, well, right now this company values, let's say, $6 million, and then in 5 years, just after they close 3 contracts with B2B companies, they will be valued $20 million, right? We do understand it because we're a lot in this industry, but these people are really looking into revenue. And let's say if you're a deep tech company, you don't have revenue at pre-seed, and you might not have it in seed, and maybe in Series A. So it's just a lot of work with this type of investors. The second group of investors is angels, and these are the professionals that it's very easy to work with them. It's yes, yes, no, no. Usually it takes 2 weeks to decide if they want to jump in this opportunity or not. And I would say that specifically for this region, angel investors invest check starting from $100K to, let's say, $1.5 million or even to $5 million, comparing to United States, where people invest something like $1,000 to $5,000, maybe $10,000, maximum 25 if you're an angel. So I would say that this region is it's very important to work with angel investors as well. The third group we also like to work with, this group is venture capitalists, but with no name. Let's say company, or let's say venture capital fund from Singapore that just opened their operations in Dubai. They previously invested in some other countries and right now they invest here. Or let's say right now we're working with 1GP. He previously invested in Kazakhstan in 23 companies. Right now he wanted to raise his first fund on in United Arab Emirates, and he would be very open to invest, and we would be very happy to work with him as well. And the third group is definitely tier one venture capitalists and sovereign funds. They are hard to get, honestly, because they have enormous amount of pitch decks every single day. They're working on this ground for many years. They know everyone. They know. They have established relationship with different accelerators. Sometimes they don't even screen companies that are, let's say, that founders are sending through the email. They work just through partners, through established relationship with partners. And so I would say that saying that everyone are very immature, I wouldn't say that. And let's say I would even give an example that in summer we worked with American company, deep tech company, and we introduced them to STC Ventures, which is the venture arm of biggest telecom company in Saudi Arabia. And the founder gave me feedback, even though he closed around $8.5 million before. He said the feedback that STC venture capital fund gave me was better than everything else I've ever experienced before. So you need to also know that there were programs from Saudi Arabia that the government sent C-level executives from a lot of corporates to study in Harvard and Stanford and receive this education for free, and government paid for it. So right now, all these people came back to the country, and right now they're investing money. And sometimes I see outstanding professionals there in this venture capital niche. So sometimes you don't need to have a very big experience, let's say years of experience in the market, but you can just educate from the best and deliver a result.
Thank you, Genia. We have another question from Ukele. Hoping I'm pronouncing that right. They're based in South Africa and just stated that they just stated the company focuses on enhancing safety and security in mining and construction industries. How can you help get funding?
Yeah, sure. Well, firstly, greetings from South Africa. It's good to know we have fellow South Africans on the call. When it comes to raising fundamentals always remain, right? You need to, number one, make sure you have a compelling business plan. I'm pretty sure you've already done the fundamentals. You've done market analysis. You've clearly outlined why the market needs your services and communicated that through your pitch, as well as your value proposition and realistic financial projections. So again, it's about making sure the data that you base these projections on is sound. So you really have to make sure that reliability and integrity of the data that you're putting through your pitch is sound, and you're able to sort of scrutinize it yourself so that you're able to back it up. A potential investor has to sort of ask you questions on it. Obviously, making sure you're aligned with the right investor. You need to look for people who specialize in sort of, let's say, safety technologies, mining, or the construction sectors. People who are understanding of exactly the need of the service that you're providing. Because I think then it'll be an easier sort of synergy between yourself and that investor. Obviously, making sure you both have that confidence in your company. And again, craft your pitch. The pitch is everything, because that is essentially how you sell and get somebody to understand and relate with your company. Number one, you need to make sure your elevator pitch summarizes your business, its impact, and why it's a worthwhile investment, and how that return is going to be achieved. Four points that I always focus on. And in your presentation materials, again, you're going to be presenting to a myriad of different people with different backgrounds, different standards of interpreting data. So something I always recommend is always making sure that you've got good visuals, make use of charts, make use of certain metrics, and present them in a way that people can sort of understand at a holistic level. If I can sort of put it this way, sort of dumb it down. So very understandable and very clear. And again, leverage network and showcase traction. You might have already secured clients or partnerships, highlight achievements so that demonstrates your market validation again, and it sort of validates the demand for the service that you're providing. So these are just the sort of key things that I would think of doing if I was in your position. But again, like I said, the blueprint relatively it remains the same, whether you're fundraising in South Africa, whether you're fundraising abroad. Everybody has a sort of common blueprint and what they look for in sort of making a sound investment decision. And put yourself in investor shoes, make sure that you're targeting the right person, make sure your pitch is airtight. I cannot see you going wrong.
Yeah, and I think if I just add to what you said, Cam, I think you made a very interesting point. I think obviously like investor target is very key, and like we mentioned earlier, obviously having all your documents ready and targeted, clear, and concise on what your goal is and what are you trying to do. I think it's also another aspect that is also very important. And obviously we cannot cover everything of what we do at MVC, but something that I can touch little bit more is I have this this thing I do for each company, which I called the red flag research, which is basically analysis, conducting all the analysis and due diligence of the data that you're sharing with us. So usually when we onboard a client, we would ask the person to share data room with all the different data they have. So from financials, pitch decks, etc. And from there, I would conduct all the due diligence from it. So really to really get to understand, okay, is your product and what you've been building going in the right direction? Is it maybe uh, is maybe your research that you've conducted is you're too focused on the big picture, and then the target that you're estimating yourself is too broad, and perhaps it needs to be more centered. It's really what differentiates us from anything, and that really helps you get your foot in the door first, is really having this entire deck document data room ready when you enter and pitch for the first time to the investors, even before speaking to him. And I think that's why like going with us, and obviously going with this with the Gidex business mission we offer for the Dubai experience is key, because what I didn't mention, but which was kind of a given, and maybe it was my fault, is we do offer obviously the service to people that are from Gidex. It's not only for our personal clients, so we do offer this exact same service for Gidex clients. So we do go through the entire decks, we do go through the entire document. We also prepare them individually to really be ready to, like I said, when we bring them to uh, investors' offices in the morning, if they have a 3 minute pitch, to make sure that in this 3 minutes they speak about the things that are important and do not talk about something that's irrelevant, where the investor could lose attention and potentially might be not interested. And all those different little things that you think probably do not probably matters, but it in the end, all those little things adds up and it becomes something that's very important, especially when you want to succeed to raise fund. And like I want to reiterate, like Jenna said, and like also Camo, it's a long-term game. It's not something you'll be able to raise overnight. It's gonna take if you're lucky, a few weeks. If not, it's gonna take a bit more. And this is why really we focus on working closely with the founders for the time frame he has to raise money.
Thank you, Nick, for that. We have one question from Jesse Lewis. So as a retail investor, one of the key factors for me is how good are the board members and decision makers at their roles. So from your viewpoint, how do you all evaluate the founding teams? How do the investors do it? And what qualities do you believe they're looking for, which is essential for success?
So for me, I'll start and then anyone can add to it. I think what's very important when you're building a company, it doesn't really matter if you're a first-time entrepreneur or second-time entrepreneur. Obviously, some VCs, some investors prefer second-time entrepreneur, but nowadays it really matters what is your background and why you're deciding to build this company. If you if you're going into an investor and pitching him that you want to work on a project that's I'm going to say something like you want to create a DeFi protocol who enables investors to invest in real world assets using cryptocurrency, for example, and your background is in energy, there is definitely something, there's a mismatch. And I think one of the key things, and I think what I've seen as well throughout the years, is VCs, investors, angels, they will base probably a bit less angels, but they will base 80% of their thesis on the team. Is the team capable of building the project, and if do they have or not the experience? Like I said, you do not need to be exactly in this field for the past 10 years to build a company that's going to enable or create a market gap that you've been working on for the past 10 years. But you do need to have some sort of understanding or some sort of knowledge that you previously worked in this industry. So in my views, I would say that 80% of investors would focus on the team and the qualities and abilities to build the product or service.
I do want to add on to that. Genia and myself have spoken about this before. We do thorough research. It isn't something where we say, okay, well, they're in this background, they're in the tech sector, they're in healthcare. We definitely do our research. Do we have a family? How many companies have you invested in? A very thorough research so that we know that we're working with quality people and what exactly are their motives behind it. So thank you, Jesse, for that. We'll go to the next one from Adil. Hi, how much are investors willing to invest in a pre-seed startup? Based on what do they decide to invest in? Is it simply on the ROI?
It's a very good question. I would probably take it. We actually organized a webinar a week ago, and we spoke about exactly this with Vijay. He's a managing director of Techstars, and I think that I asked this specific question to him. So what he said is that globally, there is much more venture capital funds right now willing to invest in late stage. But specifically in GCC region, he sees that right now on his plate, there were previously, let's say, 100 companies. Right now, it's 300 companies. So I would say that just because this region is invest a lot in tech, and there is much more money invested in tech. And by the way, Abu Dhabi right now is on the first place among all cities that invested the biggest amount of money within this year. So from one side, there is much more opportunities to raise capital if you're a pre-seed company right now. At the same time, just because there is much more companies, you have much higher competition, and it's kind of make it harder. Let's say if you're a pre-seed company in fintech and you're doing bot for trading, AI-based bot, right? They probably will be 5 more people who are doing the same, and you need to compete with them. Previously, I would say that there were not a lot of VC funds in the region who supported early stage companies, because most of the
Yeah, I think we lost Genia. I'll just add up to what she was going to say. So yeah, I think to add to what she was saying is, yeah, there is less funds in the region who are investing in pre-seed companies. However, there is still liquidity in the market for helping those kind of companies. And as you can see, with the different goals, and like she mentioned earlier, we have the Abu Dhabi 2030, which is a goal of helping a company grow in this sector. I think you're muted.
Sorry, Nick. I just wanted to thank you for that. I'm sure Genia will join us in a little bit. I do have a specific question to either you or Camo. When it comes to a founder preparing for investor meetings, what are some red flags that might turn investors away? How can founders avoid these pitfalls?
I think overconfidence could be one of the main red flags, because this is one of the things we tend to see, or I've tended to see in my experience in the past. There's this misconception that overconfidence or showing up overconfident will kind of hide confidence to your investors in securing funding. The issue with that is if you were really as good as you're sort of pitching to be, you probably wouldn't be in the sort of position where you're needing to raise funding in the first place. So obviously you do need expertise, you do need extra funding, you do need input from external factors. So you kind of need to be open to the experience with sort of open arms, open to criticism, and sort of be receptive to criticism. The second thing is also overvaluing your company. This tends to happen all the time off the bat. You overvalue your company, or when you value your company higher, there's this misconception again that because my company is valued very highly, it's a very high value company. That kind of makes sense. But the issue with doing that is, firstly, it kind of reflects kind of your expectations and your expertise in how you sort of value or your valuation sort of principles, how you sort of view valuation, and where you kind of place emphasis when it comes to valuation. And the second thing, it also kind of undermines your investor in a way. Again, if you're pretty much, providing them with a pretty much, let's say, I don't know how to sort of phrase this, predetermined valuation that you're sort of not willing to shift on, you're kind of undermining their expertise and how they can add value to you. Again, another red flag is, if they're providing sort of information up front, like this is the sort of equity that we want to offer you, you don't yet really know exactly how the value they're going to add to your company can really be measured. So again, you just have to be receptive. You have to listen with more of a listening ear rather than going in guns blazing with a sort of I know it all attitude. So those are really just very qualitative factors that I tend to see as a red flag. Yeah.
And if I may just add to what you just said, Camo, we had a client. We were working closely with a client, and when we onboarded him, I did the due diligence, like I said, and one of my key aspect was regarding his market sizing, which is also linked to obviously your valuation. And I pointed that out, and I think he felt a bit defensive because he said, "Listen, I worked and I founded a few companies. I worked for big names in the industry and in very big names." And once we had this first meeting with a VC, the first question we had after him pitching the idea was, how did you calculate your TAM? Because I don't think it's accurate. And I pointed that to our client, and obviously he at the time didn't want to change this aspect, but we try as much as we can to help the client understand that obviously his vision might be a bit biased because of being creating the company. So we try to guide it as much as possible. In this instance, our client didn't want to change his market sizing. So we still went to the meeting. The first question was regarding the market sizing, which was not an issue because we did change at the end, but it still creates this first impression of the founders do not know its current market sizing, which is already sort of a red flag off the bat. And this is something that we try and tell founders we worked with very closely, that it's a bit more important to be sometimes a bit more like conservative than too optimistic, and really reduce your expectation when you're building your financial models.
100%.
Definitely. Thank you, Nick, for that. I do have a question. In terms of the fundraising journey, we know how difficult it is, how long it is. How do you help founders stay motivated and focused during those longer fundraising cycles where they may not result in immediate success? Anybody can jump in.
Okay, I'll go, and maybe Camo, you can add. I think people have to understand it's creating a business is not a sprint. It's really a marathon. Like, it's not gonna be able to happen overnight, except if you have a very bright idea and people are really interested in it. But if you look back at companies such as Airbnb, Apple, like, not a lot of people know this, but for example, Apple tried to raise money in the late 20th centuries, and they got rejected because it was not the right time. It was not the right time, the right moment. And then it happens in the early 2000s, and now Apple is one of the largest company in market cap, one of the top 3 companies in market cap in the world. But it's really understanding that your product has really to suit the market. It has to solve the problem that many people faces. If not many, it's in the niche market, but then the revenue that you can generate from this niche market is exponential, because obviously the goal of investors is seeing high returns. They will probably not invest if your product will bring a return of a 2x in the next 5 years. It's not something that they're really looking for to. That's why having a big market has its pros and cons. But I think that's my input on the fundraising journey.
And
Sure.
go ahead, Kim, if you want to do a final remark before I close this up. We're already at a minute mark.
All right. No, just to add to that, I think also one of the big ways to stay motivated is to remember to celebrate small wins. So don't just focus on the big end goal. Set clear goals with milestones and have many milestones in between. And make sure you celebrate those little wins. Make sure you remind yourself of those little wins because it's also a mental game, right? We always look at the numbers and the qualitative or quantitative factors, and we neglect the qualitative. So always remember, it's also a mental game. It's a game of resilience. And celebrate the small wins. Take your wins and remind them of yourself. Or remind yourself of those wins on a continuous basis. Staying motivated is an art on its own. And it's actually an important part of making it in the journey of building a company.
Thank you so much, Camo. I'll just wrap it up for all of us. I want to thank our amazing panelists, Genia, Nick, and Camo, for sharing their time and their expertise today. You know, we've covered a lot from the challenges founders face to the importance of aligning with the right investors and having realistic expectations around these valuations. Just want to give away a couple takeaways. You know, fundraising is a journey that requires preparation and strategy, and having a team like us at Multipliers by your side, we can 100% make that journey smoother. And for those that are attending GITEX, we're so excited to continue these conversations in person. So don't forget to secure tickets and also reach out to us to schedule a meeting so we can meet up in person. And we'll be sending out a recording of today's webinar along with a couple of other resources. So definitely keep an eye out for that. And just want to thank you all so much for joining us today. And we're so excited to help you on your fundraising journey.
Thank you very much for having us.